We're wrapping up earnings season this week with the final few companies left to report. The time of the year is usually a happy one for Brian Sozzi, who loves diving deep into earnings reports and not sleeping. We need to talk about that, though. But this year, he says he is very frustrated by how it has went. That's Sozzi's hot take for today. Why are you so mad, man?
I just want to
not sleeping enough.
I want to tell everyone, I do find enjoyment in other things besides listening to earnings calls. So let me get that out front. But look, this earnings season has really bothered me, and it's upset me in many ways. Maybe I'm listening to too many conference calls. Maybe, Brad, I'm not getting enough sleep. Maybe I'm just drinking too much coffee. But here are a couple things that stood out to me as I listened to these really boring, sometimes, earnings calls. First, jargon is increasing as execs try to confuse investors. I mean, some of the jargon I have heard on earnings calls the past 2 weeks, I've been doing this close to 20 years now, even though I look really, really young and like I just got out of school. I don't even understand this stuff. I don't even know what they're talking about. And that really, really bothers me. And it should bother investors out there, both institutional and retail. And next, not every bad data point is a sign things will get better. It has amazed me that as these companies, big and small, have come out here on these earnings calls and their earnings releases and acknowledge that the economy is impacting their results, how they try to explain it away as a one-quarter thing. It's not. It may be a several-quarter thing. Just look at the tech companies and retail that are battling slowdowns and high levels of inventory. It could take over a year to fix these problems. Last thing as well, bad decisions are being paid for on the part of workers and investors. And, of course, see the folks over there at Snap. That, of course, is CEO and founder Evan Spiegel, who is just not getting the job done. A lot of execs continue to have these grand visions how these companies should look, but the environment today is not suggesting pushes into two new areas are even warranted. So all of that is a problem. Now, here's some of my suggestions to management teams out there. I'm going to actually cut and paste this and put it on my LinkedIn account to drive some more discussion. But nonetheless, there I am at the board seat where I do, in fact, belong. Next, here are a couple things. Clear language on why the quarter was bad. I want honesty. I want some just focus on why it's bad, what is causing it, and give me some realistic assessment on when these things might change. Number two, I mentioned honesty, transparency. Honesty and transparency on when things will improve. Also very, very important. Last but not least, care about your employees. I tweeted out a harsh take last night. Maybe I shouldn't have done it. I normally don't do these things like that. But, I took PVH management to task. They came out, said last night on their press release, they're cutting 10% of their workforce after a very challenging quarter. Tommy Hilfiger, Calvin Klein, and the other brands they own. They just made it a very flippant statement on their earnings release. They call it people reduction costs. And to me, it was just like they're a number on a spreadsheet. And that's not what you should do. You want to lay people off, do it in a different way, word in a different way. You know what? Just don't put it on your earnings release. Just keep it internal.
I think that from what we've heard from companies, there's a lot of borrowing each other's talking points that we're also seeing across the board. And that rattles, not just rattles, I think it riles me up the most, because if you see time after time again somebody just saying, oh yeah, we'll just couch it up to macroeconomic conditions. Sure, there are macroeconomic conditions, but bring it to the micro level, and specifically within those macroeconomic conditions, where are you actually seeing, put a name on it. Name that thing so that people have a little bit more indication in the future, if something does pop up, that they have a direct corollary to look to and actually better understand why it's impacting, or why that thing or that business is impacted once again.
That's awesome, Brett. That is just so on the mark. That is correct. But look, you're an executive at a public company. You get paid to predict 6, 12, 15, 18 years out in advance. That's why you're getting the big fat paycheck. Not just you, your entire executive team. You have economists on the staff. You could be doing a better job. A lot of these retailers should not be sitting on 30 or 40% inventory increases in this type of environment. That is something they should have saw 6 to 8 months ago and told investors about it in clear language.
I know we got to go. One thing that I think we are going to see more of, and we've heard this in a conversation recently with one of the meme stock CFOs, whether or not they accept that annexation into the meme stock craze or the retail trading frenzy, Say.com might be used for a lot more of those retail investor communications and kind of the Ask Me Anything formats, especially directly into that line of communication with executives at these companies too.